Good morning, this is Phillip Streible, Senior Commodities Broker at R.J.O. Futures, giving you your weekly metals commentary here. This is Wednesday, January 23rd. Looking at the metals, they've really had an impressive week so far, and towards the end of last week was very stellar here. No real big shift in fundamentals other than platinum causing most of the other commodities in the metal sectors to rise, at least the industrial metals. This morning here we're seeing gold prices right around like $16.92. They've gotten as high as about $16.96. They've really had a difficult time when they get near the 1700 level. It appears that there's some larger overhang that is almost like a cloud that's giving it this resistance point, whether it be short-term traders coming in, selling the market at that level, putting that upside pressure on the market, causing prices to back off. It seems like it gets down 1686 and then it starts to channel back upwards. The other thing that could be major overhang here is that we've got February option expiration later on in the week. I believe that there's most likely a large open interest position in the 1700 call, since that was one of the most actively traded one for several months, and most likely traders on the floor are trying to keep it below that level to have those options expire worthless. So kind of your trading range here is high 1600s down to the mid to low 1680s, and like I said, I believe that pattern will continue here till option X. Now silver, on the other hand, has been quite impressive, especially in the last couple days. We've gotten through the 50-day moving average, breaking out to the upside, and it's trading right around like 32.40. I wouldn't be surprised though to see a test back at the 32 level or just below it. On that particular option, it's not facing any serious option expiration, as the active front month is March and also March on Palladium. But as the fundamentals on platinum continue to improve, there's talks of potential labor disputes. You also have some mines that are in the process of shutting down or looking at liquidating their mines, and the overhead costs have began to eat into some of their profits. So due to those higher labor costs, you're starting to see platinum prices continue to hold firm. They seem to face a struggle once they get over 1700. I believe the high last week was like 1720. A recent high in the last couple of days has been 1709, and then historically 1740 would be a clear breakout if we got over that level on the charts. It's also picking up palladium as well. The big headline on palladium was that in Beijing you have a lot of talk about pollution controls. They use palladium in catalytic converters. They also use platinum, but palladium's more relevant since it's cheaper, and also it's predominantly used in diesel vehicles, which Europe and Asia mainly uses. So you're starting to see palladium demand start to pick up as well. Now copper's been having some problems because there was talk that the surplus that in China is starting to grow quite a bit. Their imports have slowed down quite a bit, and also their automotive sales had come off as well. So you're probably going to see copper prices range bound from like 360 to 380 until some new catalyst happens, because copper isn't following the S&P 500, which is making fresh contract highs. Again, this is Phillip Streible, Senior Commodities Broker at R.J.O. Futures. My number is 1-800-438-4805, and remember that futures and option trading involves risk of loss, may not be suitable to all investors. Good luck and good trading.